Hey guys, DJ from PTA. Want to go over these trades on SRG, WTRH, and AMC today. Today being July 8th. So I'm pretty much a day behind on videos, lessons, recaps. So I want to go over this trade, kind of give you an idea of what was going on in the market that day, give you some sentiment, figure it out so you guys can kind of get an idea how things were working out that day. So let's take it back to the daily. As I always do, I go over the SPY, kind of give you the gist. And remember, I kept my lines from before. We still ain't broke out a trend. Looks like we had a red day today on the 11th. Nice green day on the 8th. But like I said, it's still transitioning on the downtrend. So I don't think this is going to be that rally that everyone's looking for. We found the bottom per se. So time will tell that indeed. Fundamentals still hasn't changed. Nothing's changed in the market overall to make you think that it's actually going to go up. So going over AMC now. AMC, as I tell a lot of people, it's been bouncing off that 1160 area, which is, I think, is a very critical area. That was off of the weekly. But I've seen a nice little play on it from Friday. So let's go back to that day specifically. Let's go to 30 minute. So right here, we had this big, nice rally, which was A for me. And as we talk about the ABCD pattern, I've talked about on many other videos, that's pretty much the basis of where I was looking at. This is really my A. And then this became B. So I knew we was in the C rally at some point. I actually missed the first part of the trade. My entry was in at, let me show you where support and resistance were, 1975. And no, let me see something here. This is actually supposed to be 1475. Sorry about that. So this was pretty much the peak. And if you look at it from a weekly standpoint, this was actually the peak of the previous week right there. So I was looking for it to hold that area because I was critical. Let's go back down to the daily. Looks a little bit more cleaner from there. And that's why you see that dotted line, because I already have that area pointed out. That was the previous month high at that point. So this was that peak area that I was looking at, critical. So when I seen that it was bouncing that day off of that area, I took a trade. It got in at about 1480. So 1480, we're gonna paint that green. So that was right there. I took a trade. It went up to about 1512, 1515. I took a little bit off, left the rest at order, thinking it was gonna go here and then continue on. And I was just thinking that because we was already up for the day and the market was in a trend, like going up, but it didn't sustain. So actually, when it broke here, it broke, got me out here and kept it going down. So again, guys, I was looking at the overall trend of where the market was going and basing it off of what things were going on at that point in time. In that juncture, when I just took that trade right there, we had a steep decline into that critical area, which is this area here, which is at 1475, previous month high. So after it broke, come back, I was looking for a bounce and a hold and a continue on. So I caught it on a bounce going back up, but I had a 5-cent risk, and I made a quick 30-40 cent quick bounce. Nothing really extravagant in the move. It wasn't a major move. Wasn't looking for a major move because I just don't see that in the market in a lot of trades. So I had to get in and get out when I see that there is an actual opportunity to get into the trade. So again, going back to the ABC, when it came back and then hit that high, it slammed straight into support, which was previous month high. So this made it a great bouncing opportunity. But again, I was looking for it to do something like that, and it just didn't. So just unfortunate on the trade, but still a profitable trade. So the next trade I want to go over, let's see something here. WTRH. Now WTRH is another one. July 8th, that made a nice move. This is one of those stocks, and in the end of continuing on, remember, always want to make your points and look at where this stock is headed. So we're already in an uptrend. Stock had made A there, made a little bit of a B there, and then it consolidated and made it C. So this made it a great area to go in. What I do is like to wait for entry day A, so that would have made that A, because this would have been D instead. Break out a pullback into a major support area, and then that bounce. So right there was the actual entry here. So that's where, majority of the staff took their trade around the 25, 26 area off of the previous area here, because it matched it twice. So, and going into it, this would have made it the next key area to bounce off of. So you had your support here, which is A, B, and then you had a curl up. This was your C. It pulled back, created another zone. Again, A, B, C. And let me kind of paint that out. So you remember that this was A, and this was B. This became C, bust out. It failed, but not necessarily. This was a break right here, which created another A for me. Pulled back, made a B, C, and then that would have been D, and then another ABCD pattern on. So the entry was right here, right at 20, about 25, 26. It was about the area. And if you had still been holding, you would have got out 44 cents or somewhere in the 40s the next day, which would have been today per se. So this was a really good trade, especially if you have a small account. You can get in this trade very heavy and still do your thing, because that was just a great trend line break into a major break area. Now looking at the chart, going back daily, you had all your zones. So this would have been a zone here. See something here. This would have been a zone here. This definitely would have been the zone right there. See how it bounced, pulled back, slammed, retested here, and then broke away. So 32 would have been a zone. This would have been a critical zone as well at 45. So this is the kind of stuff you got to look at when you're trading. Trade off the zones, trade off the key areas where the stock pulled down from. So if you look at the chart, you can kind of look at those key areas and see, and this is where most of the volume stepped in at, right here in this key area. Right here off of the support, bounced up, did 40. That was a quick 8 cent. Came back, respected this area, major break, and then you would have took your trade probably about right there, or even right here. The extension out. See how volume creep in right here in the zone. The 42 area is where it creeped in, and that's where you place that type of trade, and that's how you make a really solid trade. So that's WTRH. So the next stock that we're going to discuss, clear these drawings. Let's go to the daily. Next stock will be SRG. So SRG was another one that did pretty good that day on the 8th. So right here would have been takeoff, came here, respected it, and broke away. So this would have been a key area right here. We'll just call that 1030s. So looking at that, and then you probably would have had an area right there. See how it broke away, and then it broke above. So that would have been, we'll just call that $12. So we're not there yet, but you kind of get an area. This line here is representing previous week high. So let's go back to the daily. No, I'm sorry. Go to the 5 minute so you can kind of see. So as you see right here, and price action and pre-market came right back into that zone, that 1030 area where it slammed from entry day, pulled up, slammed, and this is where they caught everybody right there. So when it broke down, this right here wasn't a complete breakdown because it bounced. This was off the 1030 area. It bounced and failed. So they slammed it and then gathered all the shorts right here. They tricked everybody right here in this area to rip it up higher to go long. So when I was taking a look at this stock, I missed the actual play, but this was the key areas. You know, $10 was a key area. I'm gonna put that because that was an entry day area. And as you can see, it broke down from this area, respected it, broke out, came back to this area, respected it again, and then later take off. So even if you had got in at 1030 with 30-cent risk, you still would have did pretty good, got a $1 move on that. And that's how you got to look and respect the support and resistance areas. That was clear support. And I mean, you literally talking about 5, 10, 15, 20, 25, 30, 35, 40, 45, 50, 55 minutes, maybe about an hour hold in this particular zone before it took off. The longer the hold, the better the move. So if you see a stock holding a particular area for, you know, a given period of time. So I'll give you an example on this one here. This was 9.11. We'll just call it $9, and it will paint that purple. This was an entry day hold. See how I respected there, bounce, came back, respect. But look at the time frame. 5, 10, 15, 20, 25, 30, 35, 40, 45, 50, 55, 60. So that's an hour. 5, 10, 15, 20, 25, 30, 35, 40, 45, 50, 55, 60. 2 hours. 5, 10. So you figure 2 hours and 10 minutes, it moved from the zone or from the area. And give or take, I said $9. It probably is a little bit closer to 9.10, but I like whole numbers. So 9.10 probably made it a little bit more feasible. You could have got in any of these spots, especially here or here, and risked to 9.10. And you're looking at literally it went from this move and never returning back and went to 11.30, which is a $2 move. So you're talking about a 30-40 cent risk for a $2 move before it actually shook out and needed to go come back the other way. So if you go back to the 15, it looks even more cleaner because you're in a higher time frame. So now you can see the consolidation a little bit more concise as far as the zone, and then you see how it reached, came back, respected this zone again, which was right over here, and then it took off and kept going down to the 30-minute. Gives you even better description because now you can see it kind of just lined up in that area, and you could have took the risk and had a pretty good trade either way. All right, so guys, this market is not forgiving, and what I mean by that is you have to go in with a plan. It's not like years ago where you can just get into a trade and you just buy every breakout and you make money. These trades nowadays have to be very strategic. You have to know where you're getting in at, what you're looking at, why you're getting in, and know what your risk is and respect it. If you don't hit your risk, then let it rock, because sometimes it may give it a few minutes or so for it to actually make that move for you. So guys, hey, if you have any questions, concern, leave them in the comments section, as well as click that like button, hit that subscription button so you don't miss any other videos. And like I tell all new traders and old traders alike, stay steady and stay focused.